what's happening, but we ignore it. And there's something called, the bias that we create in our brain if you're at trading in a zone where you ignore the information the market's giving you because you want to be right and you believe the idea of your entry is correct. And whatever's market indicating, breaking weave up or making higher highs, you're like, nope, I still short, which it makes it, when you think about your brain, your logical brain is there like, man, what is wrong with this person? I'm giving you this, but you're ignoring it. And you guys go on that fallacy of ignoring more and more information, and the deeper the hole gets. And, you don't have to raise your hand, I experience, but I know a lot of people experience that in trading where you get in a trade and you're like, yeah, it should work. I want it to dump, and it looks like it's gonna dump, but then it makes higher high, and you move your stop, and then you add, and then you have nothing else to add. You're burnt, right? And a lot of you guys need to stop that behavior, because if you start learning about market auction, market theory, and market profiles, volume, it really gives you a lot of information on what you should and should not do. When you look at high volume nodes for the day and like you crack below it and you're not able to auction above it, well, probably you should not look for longs, right? Because the market's giving you, hey, we had this high volume node here. We are unable to reclaim it. So anytime we come to it, we sell off. It could indicate a lot of stuff, right? And, we talk about different orders, the market makers and hedge funds, right? Their goal is to what? Do you really think they want to show you their intention on their orders?
No.
So, they might use iceberg orders, and back in the day, they had, sealed envelope bids, asks, right? And I don't know if that exists now in the electronic world, but things can be hidden from the retailers in terms of the intentions, and that's the goal. So sometimes you're really fighting, and does everybody understand, for instance, the concept of an iceberg order?
Yes,
Is there anyone?
Did you say one time that was like a big order that they like turned into like block orders, basically?
Well,
Yeah.
let's think about this. I'm just gonna go on a stock. I don't trade it very often. Let's say this one. I will trade this one soon, but not yet. We know where we're buying the sucker, so
Yeah, that was
I'm gonna
good
remove.
that.
So think
Yeah.
about, I'm just gonna give you an illustration. If you guys say it's too much, I'll stop. This is the ocean, right? Right. Let's say Titanic hit an iceberg like this, but what they didn't see was this little iceberg unbelief. So this iceberg, this is the only thing that you guys see, and you guys see sometimes when Drew's on. Drew, are you on?
Yeah.
Oh, okay. I don't know if you were gonna record, so I started as well. So this is the iceberg. On the tape, you would see, let's say, 400 orders. But this guy, on the tape, he has another 15 of those orders to sell, which would make up whatever 15 times 4, right? 400. That's his complete intention of selling. So when you come, let's say price comes, it's coming up, making higher highs, and then hits here, and the volume spikes. If the volume spikes, but the price doesn't make higher high, what do you think that is?
Absorption of the buys.
That's usually
He's
called
selling into it.
execution of an iceberg. And some of us call it absorption, right? But this is technically what happens in the market is you have this big order sitting here, but below that, there's another massive. So now these limit sells, remember, he's a passive seller here. And as the market buys come in, this guy's orders here are just hitting, and this guy's just buying here, and you're not seeing higher highs being made. Does that make sense? Usually when you see a sudden drop in the movement, we called this before stopping volume, right? Because it could be an iceberg on the buy or sell side. But in the market auction theory, you would have somebody doing a aggressive market buy for 400, but this guy's just sitting, and Drew calls it out sometimes on tape. I see an order sitting here, 500, 400, 600, right? But you don't know if that's it. It could be a series of orders, but as long as the price stops and the tracks, and it's not making higher highs or lower lows, depending on where we are, you can identify that as an iceberg order or a big order being executed at that moment. If eventually, for instance, let's go. I'm going SPY for a second. I'm gonna go in like 10 minutes. Where is this? Somebody help me. Where the hell is it? There it is. So if you think about icebergs, right? So let's say they came here on SPY, on Friday at 11:40, they came to a point. And then they sold off. Obviously, we had lower high, we put in a lower low here, and things kind of changed, I would say, from this level. Market really, didn't really have a chance till we came to the bottom here at 3 o'clock, and then you see a massive 10-minute candle here, right? And then we can also look at volume for a second. And, is it an increase in volume here? I would say relatively yes, between these candles here. Small body, but does this candle confirm buyers to you? Just between the 2 days. Do you guys think this candle validates this massive candle here?
Definitely not.
No.
Not really. I mean, when you think about it, this, if I was to add the average here, let's say average right here, we'll change the inputs to, let's say, 50 days, just so we see it. Yeah, barely cracks above it, right? So on a 10-minute time frame, it's above the average of 50 days. But when you think about bigger candles and sell-offs, I mean, this one came in at 330. The past 2 days, can this check out as a potential absorption? Yeah, I could, but I wouldn't trust it there yet, right? The volume is not really significant, and then they came back and sold off right against it with a lot more volume, right? And there's no anomalies on this at all, right? So when you think about iceberg orders and stuff, look always a little bit, to the left and see where's that volume, where was it happening? So if you just look at this, for instance, you're selling off from here to here. You look at the price action and see what's going on. We didn't come very close to, I would say to POC here. So would that be bullish or bearish? Well, let's say, what's your side? I mean, you're auctioning, but you're failing to get to the point of massive sell-off. Do you see strength there, or what do you see?
I think it's bearish.
Well, I would say it's bearish.
I would say weakness.
Yeah, it's a lot of weakness. You're not able to auction to where a lot of volume was there. Like, for instance, this day had triple distributions, quick ones, right? Small movements, and then, it looks like if you reject this one, if you cross over this one, you go here, and at each one of these, you could literally, reclaim here. You could take the short, but you don't have a lot of space to, I would say, enjoy the short between these two nodes. Probably not something I would look for. I would either wait for this, or what is the favorite thing to do when you want to short? Remember, shorting requires a little bit more patience than going long.
They go up over, come back under, retest, and go long. And go
Okay.
short.
So now just think about the simple concept, what you basically said perfectly there. If you think about this, are these the three zones where you had high liquidities, where you had a lot of action, right? High volume nodes.
Yes.
The only thing they mean, and the only thing you guys should put in your head, is that there's a lot of activity at these zones. So as the market auctioned to it, there was interested parties to exchange stuff here. So if you think about, like, if you were to go back in a day where there's no electronics, you would spark up people to wake up at these levels. They would come in and they would start auctioning a little bit heavier, right? They're more interested in these areas and they're interested in the low volume nodes. Because if you look, anytime you came to low volume node, there was a big full body candles. So here you see clusters of being defined, and then you see here rejection. Once they reclaim this, right? So I'm going into the day here. You see the first rejection was good. Off this one, I think you could have enjoyed it. If you trade SPY 433 to 430, I mean $1 on SPY, I think you can make 100% on this. Would you guys agree? Well, I'm pretty sure on options you can make 100% on this move here. if you play in the money or closer in the money where the delta is a little bit higher, right?
Yeah.
So your first instinct here is to short, and you take that short. If that high volume node was broken, then you would get stopped out, right? But there's a pattern that I enjoy a lot when I trade, and I think many older folks, not older folks, the long tenure members understand it pretty good. We went higher, we rejected at the second volume node, we lost the first one. I'll put this one first, 3, right? So the first high volume node we went above, we got rejected at the second one. You could not even auction to the third. This one here, you didn't even come close to there. If you're not able to get close to there, what is it telling you about the market auction?
They can't find value.
Well,
higher.
nobody's bidding price higher.
Yeah.
It's remember the $100 bill auction, right? We should probably do something fun for Christmas or some, but the idea is if I offered you the $100 bill and as the price and bid came closer to 100, would the volume go higher or lower? Anyone?
It's gonna go lower.
The volume's going to go lower. So there's the two things now, if you connected. As you approach resistance areas, volume can go lower as well. Just like I said, in market auction, there's not interested parties and they're not bidding. But if it's an iceberg order, you see a spike in volume at resistance, that means probably somebody's selling. But if the price reclaims that level, right, where you had the high spike in volume, that's not a bad retest of a long. Does that make sense? And I'm giving you all of this scenarios literally here. If we went here and then you came back here, this is your retest long because this is where the market auction stalled. The market was able to bid successfully over it. Now when it comes back, this is where you jump in because that high volume node was resistance and now they took over. They're going to use that as a support on the wall when they're buying, when the value is found. This becomes a really good entry for buying. And same thing for shorting. So now here, let's say, this was probably an auction slowing down. There wasn't an iceberg order probably if I was to look at this, because I don't see what tells me that this wasn't an iceberg order here. Just looking at this chart, how do I know?
The volume, no spike in volume.
Yeah, there you go. There's nothing here, guys. If I saw this bar right here and the price went down, then I would know that, Burnside then drew or got filled on a short. They're in. If they trade heavy, then they'll be entering the market with size, and we would know there's an aggressive seller here. But this is some of you guys, how do you know the entries? Well, if I see that they made a, here higher high, and then I'd say this is a lower low right here, but you're coming on this retest here of this high volume node, that was our first one, and you failed to build value above it. This is a really, really good short. This is where I would enter short. Where would my stop loss be?
Right above, right where the other node is.
Okay, you could play this. Could you not play this 10 different ways dependent on how risk averse you are?
Yeah.
Can I not do this? If I enter here, think about this. Shouldn't this be a good trade? You could target, I would say the low of the day here.
Yeah.
6 to 1.
Plenty.
If you wanted to give it more room, you would do a little bit above this.
Yeah.
Or you could go even here and look at this trade.
Yeah.
But you would be like, hey, Shorty, but now this is after fact. This is this is what happened. But guys, analyze this off of 2 days.
Yeah. Can you just go over why you would target the low of the day over just the top of the volume node that your mouse is at?
So I'll show you that. I would target low of the day, but I didn't do one more step to tell you where I would take profits if I'm not sure. So the question now, since you asked a good question, I'll ask you, how would I determine where to take profit? Is this the only profit I should take?
I would probably have taken profits around the top of that high volume node on the left, the lower one.
This volume node here?
No, lower.
No.
One.
Let me just explain this. This chart only covers from here to here. It does not cover here.
Oh, yeah. Then I would probably make another fixed range volume profile for the next run up.
That's what I was waiting for. So now I would know this. Is that correct?
So yeah, I would probably try to go for the like point of control range on that lower node. That's my.
So you could go, if you're really risk averse, you could take some profit here.
Yeah.
You're playing really, really quick. This is a scalper.
Yeah, I meant the other one, the lower one.
Yeah.
Oh,
I'm just explaining how I would envision it. If you're going to take a trade here, you're playing with fire. Eventually, you're going to get burnt out. And you're going to say the trading sucks because, okay, let's look at it, right? This is your reward right here. You have to do something magical with the risk. You would have to do, I don't even know if you could do it.
Yeah.
1.5. Even if you lower it here off the wick of this slightly above, you can get 3. But are you really playing 35 cents? I'm not saying it's wrong, but more times than not, you're going to get stopped. So there are 2 options to resolve this. What is it? Who wants to take a stab?
Take a larger take profit.
Yeah, take a larger profit. So let's say you went, I'm throwing stuff out. I don't want to judge your account. Let's say you take 3 SPY contracts closer in the money and you pay $95 for each, right? So you're what, 200, let's say 90, $270 in. So let's say this was your risk before. You had 148. You could take 2 here if you want. And then your second one really would have to be on the bottom of this high volume node, somewhere around here.
Yeah.
Because what happens, how do you know how are we going to react here?
You
don't. So that's why you want to get out on the strength. Do you know that this was going to crack here? Hold on 1 second. Good morning, bud. So you don't know that this is going to crack, and look what happens now. You went from 1.5 to 5.5. That means what? The other runner is going to have a reward of 4. Does that make sense?
Yeah, we don't know what's going to happen. We just play probabilities.
So
this would be the level I target for profit.
Yeah. So you would still take that trade even though that run up has the major high volume node so close to the rejection zone that that had already been tested a lot of the time throughout the day. So I would assume it would be pretty weak the next time it tried to go higher.
This one here, I'm sorry? Or
yeah, up at the next level, like where we rejected, right? Like we've tested that level multiple times throughout the day already. So if since we have that high volume node at the top of the run up, if we rejected off of where we did, pretty much where we would have gone short, like it seems like it could have been reasonable to just reject off of that where we did, and then hit this little POC node and then continue to go up. But I guess it's just that the risk reward is so in our favor, it's a trade that's worth taking.
I think you have to incorporate what I talked about, the market auction theory. Add that piece to your analysis.
Yeah.
Add the piece that, add the liquidity zones that you had. You add the first one here, and you failed to build any value above the second one. You came, and this is a hard rejection with the bearish engulfing. Volume wasn't spiked, so it's not an iceberg order, which means what kind of auction is it?
Was it a completed auction?
No, it's an active auction. That means there's a lot of participants and the short-term traders coming in here and shorting.
Yeah.
So if they see the weakness, once they smell the blood, all those guys jumped in the shorts. I will ask you, all of you guys, is this the best entry for short?
On the second rejection?
Which one, Shorty? The one?
Is this the best short for Friday? Was this the best short right here?
I think so. Yes. Yes.
That was actually PDPOC 433.77.
Yes, it went up and then came back in and retested. That's what you're looking for.
We broke below that level with a bearish engulfing, and like a lot of strength, and then came back and retested it, it seems like a good entry for me.
I agree. Let me give you another scenario that might challenge this. The only thing I don't like is the third component of value. What is 3 components? Price, volume, and
Time.
The time.
time.
Um,
This one here is a much better rejection than this one. And I want you to think about who can say why is it better.
Because you're retesting where it broke and failed of the POC.
And one more thing, and you got it. There's one more thing. Think naked trading. I want you to connect to this slide, and I think you'll get it. It'll click.
broke structure.
Can you guys think about it now? Let me remove all of this. We made a higher high,
It's easy
lower
from-
high.
From
Lower low.
there you break structure.
Broke structure, yeah.
Not there, down there, yeah.
So you made higher highs, higher lows. Here, if you want to call this, sure, right? This is your higher low. I would, if you get a bounce like this here, where you're basically breaking the structure, changing the character, it's you can consider this one as well. I prefer to see on the pullbacks when I see this. I really like this to see broken to confirm. Preferably, that's my style. A lot of people would say, this is higher highs, higher lows. Once you clear this low and you put in a lower low, lower high, you're changing from bullish to bearish, right?
Mm-hmm.
But here, if you think about it for a moment, oof, man, what in the world did I do?
Oh, that's so much better.
No. If you think about it, you had higher highs. You had this POC that was, I would say, fairly important here. Where was that POC? That looks right. So you had this POC here, and then if you take a look at the buying, right? This was your buying POC. I'm just grabbing the uptrend of that day, right? I'm not grabbing more than that. But now pay attention to what happens here. And you guys, I don't have to cover this crap. I don't treat this as one level, so you guys should know that by now. Same here. This is not one level. This is more like this, right?
Yeah.
So now if you think about it, was this a good short? Yes. This reward here was much better than the reward here, but the probability of a short, this one was better.
Yeah.
Because here, what did you do? This is your change of character. This is where you said, hey, no more lower high. I'm cleaning it up and I'm putting a lower low here.
Yeah.
So now when you think about this, if I was to, let's say, grab this rundown, you have the run-up POC that's here. You have the rundown POC that's very close to the run-up POC. So that means the volume was very, very active between the two areas, between 433 and 432. So what, like 35 cents, right?
Mm-hmm.
It was really aggressive, but you lost this buying volume. You tried to reclaim it here. I'm not paying attention to these 3 zones now, just for today. You are not able to hold this. And then you broke down, changed the character, right? Here you change the character with massive green, right? Body. And then what happens here? What happens in terms of market auction?
Starts to get weak.
It's slowing down. It's
Yeah.
immediately slowing down. And if you knew about it, right? If you drew the POC here, you would see that this is your first, I would say, liquidity zone of the sell-off is here.
Mm-hmm.
So how could you play this? Well, this one, just the timing on options. If you're playing 0 DTE, I don't play a lot of 0 DTEs lately, but if you're playing 0 DTEs, right, you should not size up in the moments when you have, an hour or less left, or just add +1, play 1 DTE, and, you might have a better calmer trade, I would say. But now you change the character, you broke through it, and I would say, is the break valid in terms of volume between this and this? Is there confirmation that this is breaking down?
Yes,
What is it?
it's right there. The break of character.
Okay, but why is it?
The volume is increasing.
Thank you. The
Gotcha.
volume is increasing.
Yep.
We see this volume tick, 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 and
Yeah,
it's picking up.
Yep.
So now we know, hey, these people are selling probably aggressively. Okay, so we went from regular candles, we covered the market auction theory. Now we're looking a little bit of volume. The volume tells you, the bottom volume tells you if the break is valid or not. The candle shapes can also indicate if there's, stopping volume, if we're slowing down in the auction with the tails access stop or buying access on the bottom, right? Selling access, buying access here. Those are the things you can tell from the candles along with open, high, low, and close, right? When I look at the volume, what does the volume provide you? Versus a candle. What is volume profile? So if I was to grab 11:30 to 2:10, let's say 2-hour candle, what would the volume provide that the candle does not? Why am I using volume?
To see where the action is, where the
Price
most
is-
trading is.
But people say volume doesn't matter.
Oh God, it matters.
If I did not know this, right? I mean, some people that trade, let's say, consolidations, this is a consolidation, right? But how do you know where the aggressiveness was? I don't even know on volume where the aggressiveness was, but I just know where the high liquidity areas were. I know where the high volume node is, here, here, here. I know where the low volume node is, and guess where we ran through with the green candle? Is it here?
Mm-hmm.
Right? So all of this, and I also know that below here is what? Why did I circle the bottom area?
Lack of volume.
There's a lack of volume. How do we know that?
The bottom.
Yeah, how do I know there's a lack of volume here below?
There's low volume nodes.
Okay, what else?
It's not highlighted. So 68% of the value is above, not below. That rundown.
That's correct. Your value areas are indicating where is the volume concentration. And the volume is concentrated between here and here. Everything below, there's two things. If I, as a seller, I'm not interested in selling at these low prices, what do you think I'm going to do?
Screw people over and run it up.
I'm just going to remove my inventory, guys. Why do I have to sell? Is there somebody that says you have to sell this low, large quantities?
No.
Hey, little man. Sorry, my little guy came in. So below the value area, right? That's why there's always an opportunity for, right, 80% rules to work out is once the unfair value below is identified, if the sellers are not willing to sell, they move their ask and offer higher. Well, there's nothing to buy there because nobody's doing what? The other side is not selling.
Not selling. Yeah.
And yeah, good.
Let's say that you got short at the retest after the change of character. Would you then target the value area low of the rundown?
Correct. That's correct.
Okay.
Yeah, that's my first always.
So,
Why would that be my first?
It's a high concentration of volume potential rejection point.
Yeah, I don't want them to accept this value because that means acceptance is coming here.
Yeah.
Right?
Uh,
And you see that's your high volume node right here. So that would be my exit. If I got in, let's say on this POC. So let me visualize it. Good question. I would probably do something like this to be on the safe side. And let's say I do this 2.5 trade.
Yeah, it does. There is another volume node that's like just a little bit above it that has almost the same amount of volume. Would you potentially trim one contract there and the next at the other one, or would you just kind of hold?
If I played 0 DT, and I'm being honest, I would sell both at that point. If I saw
At the top one?
At the top one, yeah. If I played 0 DT and there's 30 minutes left, those contracts and the deltas and the theta like really work
Yeah.
almost against you, right? If I was trading futures, I would have a trailing stop. I'm on 10 minutes. I don't trail on 10 minutes. I would have a trailing somewhere, let's say in the middle of this LVM. So if you take me out, I still kept, get few points. But if you break this node, then I get a little bit more reward.
Yeah. So
it depends the instrument that you're playing. If I play 0 DT options, my game changes.
Yeah.
If I take this trade here and I'm up 80%, which happens right here, would I ignore that? No. I would most likely, considering it's late in the day, I would close it all at 80%. And one thing I don't know how long you know me, but 80% is a lot for me. I know people like thousands, but I've never made money on thousands. I made it 80 plus 80. I've never made it, even 80% is a lot. If I
you take 80% on an options?
Oh yeah, I'll take 15% on options, man.
Oh, okay. Yeah, I just didn't know what 80% you were talking about.
No, 80% return.
Yeah, okay.
If I'm up 80%, man, that's great money.
Yeah.
If I'm up 20% on 15 seconds trade, guess what? I take my money, right? I don't leave it for market makers to justify taking it back and working against me. I got into the market. I was able to take something out of it. Now I'm out. And that's the mindset that a lot of you guys don't have yet is, you see people posting ideas of something that's doable. I'm not saying 1,000. Have I hit 1,000%? Yeah.
Of course.
But did I put my whole full portfolio to hit that 1,000? No, because the probability of hitting 1,000 is much harder than probability of hitting 15-20% over and over. So I'd rather play with the probability side than play with the gambling side. Otherwise, I should just go to casino and fucking take $1 million and bet 10 times, 100 each, and see if I can double money, right? It really, the odds are not in your favor. It's almost like when you go to those, what do you call them? Like, have you guys ever played that little, like, it's almost like a baseball. I don't even know the name, but it has those targets with numbers. And always the outside numbers, I don't know the game of it. It's like a Dave and Buster's. You roll the ball and you try to roll it in a 50, 10, 20.
Yeah. I know what you mean.
Ski ball?
The tickets
Yeah,
come out.
I don't know the name on it, honestly. You're probably right. But like it has a circle in the top left. And it has a circle in the top. Yeah.
Circle and a circle and a circle.
And then inside here it has a big one. Well, this is how I teach my son lesson on probabilities. We go to Dave and Buster's and he wants to play against me. Where do you think he goes for? These are 40s and 50s. Here's 30, 20, I think 10. I don't know.
The 40s
Either way,
and 50s.
he goes here. He's aiming for these. He wastes 12 balls here. All I'm aiming for is here. I get a score of 300. He gets a score of 50 if he hits 1 out of 12. And then he's like, hey, Dad, like, how come? Blah, blah, blah. He's like, but I'm going for the bigger one. Keep in mind, he's 6. He doesn't understand it.
Yeah.
But when you tell an adult the 15% every day will make you a billionaire in 30 years, they're like, what? Seriously? I'm like, yeah, dude, like it works that way. But a lot of people don't have that mindset to be consistent, not to impact the compounding. So, you asked, would I trim here? Hell yeah. Depending on the 0 DT, depending on the instrument, I would trim that. But then, let's say you had multiple, you bought 3, you trim here, and you see that we're, picking up steam here, and you break this, man, you can enjoy this, right? Because then, the POC is going to be probably at the bottom somewhere on this run up, and that's where it's at, 431. They even cracked, right? They broke the low of the day at 350. Which brings me to a point that I just want to give everyone kind of the visual. These are the candles, right? This is your volume. If I was to basically from here to here, you could tell where the action occurred, where a lot of volume was traded based on the price action, but you don't know for sure until you draw the volume profile. Agree?
Right.
So the volume profile gives you the high volume nodes, the low volume nodes, gives you the concentration, and gives you the value area. Compared to a candle, what does this candle give you here? What points of information do you gather from this candle?
Anomaly.
No, just think candle, no volume. This candle by itself. What information do you gather here?
Just that, I don't know, strength.
There's 4 points. What are the 4 points of the candle?
Open, low, high, close.
Open, low, high, and close. Versus volume profile. What piece of information do you got there, Island?
Time, well, you get value at price
Okay.
and time.
Okay.
And also where the highest acceptable price was at that point in time and the lowest acceptable price was at that point in time based off of val and VAH.
Okay. All right. So here's candle. That's a regular candle, right? Kind of real candle. I just drew this morning, so you guys. I'm not trying. If this is not really valuable to you guys, let me know. But I want to see how you guys can connect from candle to a footprint and why I use all three and how I use it. So candle, we said it gives you what? Open, high, low, and close. Do you know where the aggressive seller was on the first candle? Do you know where a lot of volume happened on this candle?
On the top.
You don't know that. You have no idea. Off of this candle, you cannot tell. You're going to be making
Oh
a
no,
lot
sorry,
of assumptions.
sorry, no. I was looking at the second one. Sorry.
On the second one, you get more. You get
Yeah.
all of this info, open, high, low, and close, but you get the distribution of volume.
Yeah.
How is the volume distributed? Well, I can tell here, volume was distributed in the first standard deviation between here and here. With the highest concentration where? 4380.
BLC. Yeah.
Okay, I see volume, slow down, of course, below the 68%, but I do see a high volume node, the 62, right? And then I see really, I would call it single prints occurring somewhere around here, right?
Yeah.
There's some single prints here, but I'm able to identify a little bit more market information, right? I have where the volume was, where's the value area, where's the high volume node, where's the low volume node in these. So now we have a candle with 4 pieces of information. The second step on volume gives you the 4 plus additional information, distribution, value, HV, and LV, and POC. So now you have that. So now what does footprint give you? You're going from volume profile to footprint. What does that do?
Shows you the completed orders, and I can see that big seller.
And you can see the big seller. So now you get everything the first candle gave you, right? This candle, guys, this was good for trading rice. This is much easier to trade rice. But now I know, Drew kind of spotted it early, there was a seller sitting at 43.97 3/4, a level that you guys should go back to last watch list and see if it was mentioned. So we were able to identify where the aggressive seller was on this volume. Because here, right now, we don't know, right? One might think it was a 43.80. Could you tell that he was sitting here? You couldn't tell based on volume.
No.
You
No.
could tell that that was the extreme value area high, and that most likely that this seller, in this case, is a responsible seller. You came in, the value was high, and what did he do? He sold at the high value. He's going to buy back at the low.
Yeah.
If you're in a D shape or some kind of consolidation. So now you have volume distribution plus closer look tape, see if it was aggressive buyers or sellers. Hey, can you guys please leave? Go downstairs, go in your toy room. Sorry, guys. Out. The little guys just. And then you're able to see the imbalances happening, which is the aggressive seller was here. Then you have what on the bottom here? You have a really aggressive buyer coming in at the bottom. Does this, are you guys able to at least see how you go from one to another and the use cases of it? Does everybody see it?
Yeah.
Does this help you guys with the slide like this so you know? What I was thinking from this scenario is to give you, for each scenario that I look for, you know, high volume nodes retests.
Yeah, the
What I
slide
would
here.
expect what I would expect from candle, what I expect from volume, what I expect from footprints, almost like a checklist. When I see, you know, a high volume node and it's going higher and coming back, what do I want to see from each? I would kind of find examples and list them here. Then I would do an absorption model as well. There's 2 absorption models. I would put those in there as well, and I would explain it and give you guys a checklist on each footprint what you're looking for.
Yeah.
Right.
You added that to the PowerPoint?
I was thinking if that would be valuable to you guys. I can
Yes.
spend some time and add that as the next slides, but I would cover at least 5 scenarios with the checklist what to look for, because then what do
Yes.
you do as a trader is you find one and you basically fucking execute the same thing over and over. You don't have to, guys, you're not a soccer player, you're not a football player. You don't have to throw a fancy throw every day to be like, oh my God, Patrick Mahomes. No.
Yeah,
If
that
you
would
can
be
just,
very
if
valuable.
you can
yeah.
just do the same thing over and over, increase your probabilities, tweak them to work in your favor, you don't have to fucking complicate it. But you have to know what you're looking for, because a lot of information I give you the freedom to create your model of what you're going to trade. Sometimes I, you know, in one-on-ones, and why I came up with this is I noticed that some of you, I don't know if you're afraid, but you're afraid to create your model. You have to have an option of creating a model, whether it's this plus the orbs plus many ways to skin it, right? Skin the cat if you want to do it this way or that way. Does that make sense? But I think with a couple of models and checklists, you could find, I traded this today. And if you learn 3 models, then you have a higher probability of finding a trade, right? Because if you trade one model, that one model might not even show up that day. Does that make sense? Is everybody following the idea or no?
Yes.
Yeah, that makes sense.
So I'll probably do that this week. I'll give you guys the models and the footprints, because I have to go through, you know, charts to find what to look for, so you guys have the visual. And I was just gonna give you, we'll name them, you know, examples and models, and then you guys will have the ability. Okay, I'm gonna trade this setup. So when you know, I entered short, you guys can be like, yeah, that was, you know, retest fail POC, or you can be like, that's an absorption model. That was a retest of a high volume node, or an imbalance play. So you guys get an idea quickly, and it's almost like a multiple choice. It's one of these 5 or 6, whatever we come up with, why we're in a trade.
Shorty, when you're looking at the candle and footprints, and let's say it's going up or down, and all of a sudden the POC moves. Let's say the candle's going up and the POC all of a sudden moves to the top. Is that acting as a rejection point or a support resistance point?
You have to look a little bit more in the context, right? The footprint by itself, how much value is it? How much value is if you just look at a footprint? But you have to look at the context of what happens around it, what happened before at that level on the footprint.
Okay.
If you had something that, you know, Drew and I like to trade as a high volume node retest, he has slightly different model than mine, but that's okay. And I like his model as well. It's just higher probability, but doesn't show up as often. And do you know which one that is, Drew?
What with the 2?
When he has 2 POCs
30
lined up
minutes,
exactly perfect.
Yeah, 30 minutes. Yeah, he said
It's a really high probability model, but Drew, do you see it a lot on 30 minutes?
No.
No,
You
you
might not
don't
see
see
it a
it
lot.
often.
But if you do your eyes, you're like, oh man, this is my trade.
Yeah. Oh,
You
hell
you
yeah.
s- you
That's a
spark up because
100 point trade on
Yeah,
NQ.
we talked about that, and he's like, man, this is like money, but it doesn't happen very often. So
well, and that's okay. So this is the psychology of trading now. Just 5 minutes on it. A lot of you guys want to execute trades and trades and trades, but if you just spend a week, this week, pick a model. I'll give you guys a model to pick, like high volume node retests of long or short, and see if it happens. And if you execute that trade, then it takes the guts, the instinct, and proper risk management. You could probably do one trade a week and be done. For a lot of you that have smaller accounts, that's not true because you're looking to grow and repeat and compound. But once you become an established trader, I could size up 40 contracts on something and I could probably make 10K within 10 minutes.
yeah,
Right. Do I need more than that in a week? Probably not.
no, hell no.
Not for me, not for my lifestyle, the way I live in my family, right? Is there people that would be like, man, I need another 50? Yeah, sure. But that's all dependent on what your desires are and how you want to deal with it. So being more selective, can you scalp in between? Yeah, of course. And you guys see me doing 100. You guys
All the
probably
time.
notice I have one big trade and then you guys see my size goes to 1.
Yep.
If I'm up, let's say 3-4 grand, I can take 6 trades at $50 stop loss and for a reward of 150. Because then I know if I hit, 2 trades, I can break even on those fun trades. Does that make sense? But that's the psychology of you guys have to be more selective with the probabilities on your trades and the setups. But I think the model that I envisioned last night, I think it would help many. Where you guys will have these models, you would select what works, and then you could go back and I can't help you guys more than you guys have to spend time on the screen and finding these things, right? You looking at me when I'm trading live or Drew is very helpful because you see it executed live. But until you click and your emotions and blood starts boiling because your money is at risk, you will not have the complete picture of trading.
Yeah, you're right.
You guys have to spend time on screen and looking for these things, and then it starts clicking. Trading is, like I mentioned before, is very lucrative. You can make quite a bit of money in short period of time, but as long as you have discipline and I would say repetition in your brain. I coach soccer on my son's side, and yesterday actually with my son, I tossed the ball to him in the air. He's 6, right? And I want him to receive the ball, and we did it 50 times. And you know what he said? He's like, "This is so boring. I'm gonna go inside."
That's what I was about to say.
Why is that repetition so boring? Because he doesn't see the next time the ball comes and he's in the game, that his muscle memory is just gonna click and he's gonna receive that ball without the ball bouncing. It's just gonna happen. He won't have to think.
Yeah.
Players that are high caliber, Ronaldo, he had practices of 4 hours shooting from one side of the angle, one side of the corner, one guy in front of him dribbling to the right, shooting from the left side, top bins, right corner. And he would do that for 4 hours straight. Then a game comes in. Do you really think he needs to look at the goal, or he knows where he's at and he automatically knows where the goal is? And that was the muscle memory. He didn't have to think. Defender had to think more. How's he gonna defend? Is he gonna go left or is he gonna go right? Because he can do both, but his preference was right. But he was so good and automatic that you had to be so good at defending accurately to stop him from scoring from that angle. And it's almost like trading. If you look at the high volume nodes, let's say that's the model you go with, and you play the Ritas, is there times that you're gonna miss? Of
Sure.
course. Is there times that his shot missed? Yeah, but what did he do? He went back, and what do you think? He cried on the soccer field? No, he probably practiced double the time until more goals out of the shots went in. And his memory and his emotions got easier to manage. For a lot of you guys, you see a failed trade on a setup, and then you get discouraged. And a lot of you guys, if you don't journal, you wouldn't know if it works or not. You would be gambling at the statistics of your own trading. Okay. Hopefully, I didn't bore you to death with this slide and what we talked about so far.
No, Shorty, these stocks are very valuable, man.
Let me see. I thought I had a slide here.
Yeah, they are. Not boring.
No, they're real valuable to me. At least I can say that.
I think I added a slide somewhere. Oh, added a slide somewhere else. I added a slide in a different deck. Can everybody understand this picture? I tried to do Nikola Tesla on the right and Einstein on the left for you guys.
No.
Who wants to explain it? Somebody. I'm not gonna do it. Bean.
The highest price a bidder is willing to pay will match the lowest price somebody's willing to sell.
Can you give me an example?
I want to buy peanut butter for $5 a bottle, and they're saying, I'd like to sell peanut butter at $6. Does anybody have $6? Nobody says anything until finally the auctioneer drops the price down to $5. Then the highest bidder picks it up at $5.
That is exactly this whole picture illustrates. In the middle is your dealer, the locals, and the market. The market is the mechanism basically that combines the buyers and the sellers. And then I call this the order matching, right? Because we went so electronic and it's so fast paced. I can't even conceptualize the speed of these computers, right? Me not being super tech savvy, I can't even imagine how fast the orders are executed, matched. You get a statement instantly on your profits and P&Ls. I don't know if you guys are amazed by it, but I'm definitely amazed by the speed that this happens right now compared to, let's say, 40, 50 years back, when you had slips and papers. It didn't work so fast. But now it's exactly what Bean said. If you have sellers and they send it to the dealer, now dealer has these sellers, the buyer's bids, and they're basically like, hey man, like he said, I'm selling the peanut butter at $6, and this guy's like, I'm willing to buy at $5. The dealer, can he match? No, there's no match. The only time we match is when you have the highest bid matching the lowest offer, and that once matched, the trade's executed.
So is it safe to say that that would be a high volume node right there?
Well, I wouldn't say that. It depends how many orders are executed, right, at that level. But if there's a lot of orders executed at that level, it becomes a high volume node. And if we auction higher or lower from there, let's say then the lowest offer price goes higher, meaning it goes from 6 to 7. So now that could simplify. There's no longer what on peanut butter. Careful how you answer. If I'm a seller and we're selling here and I sold a lot here to you, and all of a sudden the lowest offer I have is 7. It was 5. Now it's a 7. What would that indicate from seller standpoint? Think before you answer.
He sold most of his inventory.
Ah, good job. Yeah, he's very low on inventory. So what do you do when you have something low and the demand's pretty high?
You gotta buy more inventory.
Well, or increase
You
the
raise the
price.
price. Yeah.
Raise the price.
Yeah.
You raise the price. Just think about the housing market, right? Once you got, I'm not going to call them other time frame buyers. We'll just call them other buyers like Zillow, like what's the other company? Forgot the name of them. The Red something. I forgot the last.
Redfin.
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 Yeah. Once those companies were able to, enter the market and buy some houses, they created competition, right? They added competition in which they would win 9 out of 10 times. If you're a real estate agent and a broker or mortgage broker, it works with proof of funds. It works with how liquid your debt to income. These companies sitting on cash, do you really think they had a trouble getting any loans or financing or just buying cash straight out? As a seller, if you're selling a house and Zillow comes to you, is like, I'll close within 2 days, I have cash. And the other guy, Michael, is willing to give you 5K, but he has to go through the loops of verification, and it's a period contingency 2 months. Which one do you sell the house to? You
The
personally,
guy
which one
that's
do you?
got the money right there and then.
Yeah, the guy that has the money right there and then. So the housing market, the demand was pretty high, driven by, I call them institutions, right? Institutional buyers, where the retail had no ability to compete with that. And therefore the price was driven higher. There's actually a really good documentary on Netflix about it.
Mm.
So does this picture now make sense to all? This repeats constantly. That there's no stop to this. Only stop is right now until 6 o'clock.
Yeah. Yep.
Yeah.
Okay. All right. Well, with that being said, we'll switch over to actual charts. Guys want white or black? Black. Heard white. Great.
White.
All right. So let's just zoom out a little bit. Let's go on the weekly. Candles wise, I would say this is you had a decent absorption of buyers here, and would I say that there's potentially an iceberg sitting here? I would. Yeah, this candle here is telling me that there's a potential iceberg sell here. Anyone disagree?
No.
Yeah.
So then, Shorty, if you wanted to play that, would you look at maybe like a footprint chart of that weekly candle and see where the highest like negative delta was, or point of control of that candle was, and try to short there if you approach it?
That's
That hammer candle.
Yeah, that's exactly it. Good job. That's how you would combine that slide that we just, I don't know which PowerPoint I have. I don't know why it opens 2 PowerPoints for me. Whenever I open PowerPoint, it has 2 copies of it. So this is where you would combine that, like the candle plus volume and footprint. And you would look, what you're looking for is you would go down to footprint, see if there's aggressive sellers at some point on that candle on a weekly. Is your level on the weekly going to be executed on Monday?
No.
Who knows? So the most important piece is the
Oh,
patience.
yeah.
You got to wait. You don't know if it's going to happen or not. You do know some points of information based on history is that there was similar action here where there was buying, aggressive buying, and you came back, and guess what? You revisited this point for now, I don't know how much, and look, you're coming here, and again, you are not able to take out the last people that were selling there, right? And I'm just giving you a bigger picture now. If you look at this here, there's a high volume node sitting kind of right there where you rejected, I would say, it's up to 56. We came in 33 on a 2-year period, 20 points variation. I don't think that's a big deal. Honestly, I don't think that's a big deal. So now when you took at the current picture, right, since we put in October lows, right, we really haven't had, when you look at weekly, we had multiple couple of weeks that were reddish, right? I would say only 2 times you had where the 2 weeks in a row were red. Do you guys agree? Or 3 weeks. Here's 1, 2, 3, 1, 2, and then 3 in a bounce. So you haven't really had confirmation till potentially here. And why is this one different now than here? Well, one is at support and one is at resistance. Does that make sense?
Okay, say that again, please.
Well, some of these here, the red days, occurred at support, and then you had an absorption of sellers with buyers.
Yeah.
But now you have 3 days here occurring at the resistance, right?
Yes.
Somebody's trying to get rid of the inventory at the top. This is a classical, selling climax from Hannah Cooling. If you look here now, this is your consolidation. This is where you're selling. What do we need come Monday? If you want to see something, what has to happen Monday? Literally has to happen Monday, or we go back into the bracket.
Need aggressive buyers.
Aggressive
Push-
selling.
We need
push
aggressive
the character.
sellers to
Price
come
up.
in. And we need to clean this low here really, really fast. And you see the volume
Oh, I meant to
picked
go
up here,
higher.
but then
Sorry.
slowing down here a little bit. Even with the buying and then the selling, slowing down a little bit. So if we don't see a good volume day with the break, I would expect them, they can stay in imbalanced market for a while, guys. If you go back through the history, you will see that we can spend, zoom out.
But to go higher, you would need aggressive buyers to break the character.
Yeah, you will need some kind of shift. But look at this here. And people say, man, yeah, we can't stay long here. Newbies, you can stay long as, how about 5,753 days in a range. That's
We've
from
seen
here.
it.
If you're, you can't be naive to say that we can't stay here. We can stay here for a long period of time. If we stay here for a long period of time and we don't make higher highs or lower lows, that move is going to be pretty
Huge.
aggressive.
Yeah.
Because I'm just saying this POC has not been revisited.
And the longer we consolidate, the bigger the move.
That's true. The more aggressive it gets. Okay. So now, don't think it won't. We can. Market does not give a shit what you think or what I think. What I have to look for is if you're going to break this volume, if we're going to break this with high volume, if we don't, then it's normal for me to, what I do is I look at the sigmas, right? Because we're consolidating for almost 4 months. We're going to be done with September here shortly. So we're going to have full 4 months of data to look at. And now I know my sentiment really changes at 41. Oh, I'm sorry, not 41, 44.20. At that point, I would expect us to potentially go to the high volume node at 45.40. If we are able to set prices higher, then we can hit the structure high at whatever it was, 46.35, right? We have to crack this bigger picture quickly on Monday. They should have follow through from sellers, meaning that any buying that occurred here before, you see this aggressive buying here, absorption has to be eaten out. So they tried here, they tried to bounce it, but this bounce now did not equate to any higher highs, right? So if you guys go, when you came here, right, you see here last time you came, they took out this change of character here. You guys see it? For me, this is the change of character on this downfall. Lower high, lower high, lower high. And look what they did. They struggled right there. This is considered a break of change of character in my world. This low wick, you did not auction higher. You just tested the supply.
Mm-hmm.
You broke it. Now you get an idea that there will be a bounce here. And then it, it's not too difficult to know where the bounce will come. Then you're using volume profile, and guess what? They came in right here, they bounced, right? If you're playing this for a major bounce, you should not be stopped out on this here. Okay, does that make sense? So this was the change of characters. Now, if you want to see a shift, what's the level you have to break for the upside?
Oh, I can't see it from here, but
So we said 44.20 is the POC, right?
The POC.
You have to break 40, 4507.
Yeah. So structurally, we said, I'm sorry, volume perspective, we said 44.20 is the level because that was right here. I would say. I'm sorry, maybe a little lower. I don't know what time frame. Sure, let's call it 19. That's the area that you need to be above, and I would definitely draw something like this around it. Right. This is where your bias is starting to turn a little bit bullish. You guys agree?
Mm-hmm.
Right. Now, if you look here, did we break any character on this bounce here?
No.
We got the bounce, but even this, if you're considering this change of character, that's fine. I would most likely consider 40, 40, 44, 40 here to be the change of character.
Yeah, I was even going higher.
Yeah, I mean, you can, right? It just depends your appetite, right? If I go on 4 hours, the picture changes
Like
quite a bit.
I was looking at 44, 4506, 4507.
Yeah, you definitely can. But here, just to give you an idea, this would be considered an SR flip here.
Yeah.
Support, you crack through it. Now, if you're coming here, from structure standpoint, you could go along about 44.20 to 40 because that would most likely be the target they're hitting, right? But reclaiming this, then it opens up the doors. I'm pretty sure that there's a low volume node up until here somewhere. So we'll find that guy, and there's no volume here. So once you reclaim 4,400, you have a little bit of space, right? You have a little bit of run that you could do some volume nodes at these tiny ones at these levels. But then, until you hit this value area low and this volume node here, 71, and ultimately 4,500, you don't really have resistance to go up. But how would I know tomorrow or even today, we could take a look at it. How would I know if there's interest to go lower? How would anyone spot that?
Fibs.
Anyone else?
Possibly aggressive sellers on aggressive sellers around that area.
Okay. Anyone else want to take a step?
You got to look to the left to see what's on the left.
No left. No
Okay.
left. In this case, no left.
What are you looking for to see where
Well, I'm asking you guys first.
to go lower?
I want to see if there's interest here to go lower. Like, how would I know? What
You'd
can I
have to
look
make
at?
you have to make lower lows.
Okay. Anyone else?
Value area shifting down from the previous day.
Good. You guys, these are good points, but there's one specific one I'm looking for.
The POC moving low.
How much volume did you have
Oh shit, that's right. The volume.
on the bottom?
Yeah. No.
Are they really interested in selling inventory at the bottom here? Remember that market auction graphic that I showed you? It's the lowest offer being matched to the highest bid. Do we have a lot more offers left at these prices? How can you tell?
No, the numbers are getting smaller at the bottom.
Well, they're
Yes.
getting smaller, but you have to know where the price is. Where is the price relative to that volume? If you see, that we're coming here and we're slowly grinding up, that means the inventory is being shifted. The ask is going up. That makes sense? If you see a big spike and price rejects, what does that mean?
It means they don't want it's gonna go lower.
I explained it. If I have the ocean and the price bounces right here, I am hitting what?
You're hitting the iceberg.
I'm hitting the iceberg. There's an order sitting there, so I would expect which side to be inflated on a histogram.
Ask.
The bid.
Careful, Cuban. The bid.
The bid. Sorry, guys.
You want the bid
The
to
sellers,
be
yes.
inflated.
So
It would be
I
passive
confuse
buyers
sometimes.
buying at the bottom.
Yeah.
So now if we notice, let's say tomorrow we're not able to crack through some of these levels on the bottom. Right now, it looks like, we had uncompleted auction, failed auctions on both, right? I'm just looking strictly on footprint charts. Can I check that elsewhere right here? Yeah, of course I can check right here. What do I expect to see on the market profile to know if it was a completed auction?
No, one letter.
The one period. One letter equals one period, one TPO. So this was letter I. We see some single prints, and then you look where the price is, right? So we closed a little bit above the single prints, correct? So on Sunday, if we reclaim 43.67 out of the gate, are you bullish or bearish?
43.67.
That would be bearish. I mean bullish. Sorry.
It would help you confirm that, we did not spend a lot of time here. We did not spend a lot of volume here. You have two components here, time and volume so far. And if the price was not attracting lower here, what does it mean? It means that ask is getting higher. The inventory is low. They got the inventory now. They're going to look to sell it. They can't sell it here. They're not willing to sell here because they bought it here. Does that make sense?
Yeah, the buyers are stepping in.
Somebody's buying. There's not much willingness to sell, and we're in a bracket on the 4 months. So, from value area TPO perspective, market profile, this is the profile that you guys have for Friday. Your value area is at 44.15. The POC is sitting at 43.80. We mentioned 43.80 earlier, if you guys recall. Now, if you're reclaiming 67.80 becomes highly doable. And then your target mate, I think my wife turned on heat in the house. I'm burning. We're targeting 44.15. And this is using the market information that we talked about, the three components, candles, volume, and footprints together. Now, if you look at this, right, let's go on ES. I'm just going to go on typical 30 minutes that I look at. Okay. What do you see on 30 minutes that's happening since 3:30?
All the volumes at the bottom.
And what kind of volume? Drew, don't respond.
I can't really see it, but
It looks like the passive buyers.
Anyone else? What do you see? Look around.
a lot of red volume
Okay.
at the bottom.
Yeah, the delta is negative.
Yeah, but the delta's decreasing in negativity. You hit negative hard and then it starts
I see
falling
that.
off.
Yeah, you got 14,000, and then you got 6,000, so it's decreasing
Yeah, but
the delta.
It's turning green. It's gonna turn green.
Okay. Well, let's execute this. Monday's coming. Where do we go long?
The reclaim of those POCs at the bottom.
All right, let's look at it this way. So you had a massive red delta, and then you have delta here just jumped a little bit, right? But did the price go lower between the two?
No.
No, not really.
Okay. Let's talk about that iceberg one more time.
Oh,
Iceberg
okay.
is,
Yeah.
if this is not an order sitting here, what should happen? I even asked on Twitter, if you have a spike in volume and the price is not correlated to the size of volume, what does it mean? Is there an increase in volume?
No, wouldn't that be like an anomaly?
No. Don't say no. From 150 to 351, there's a lot increase in volume.
Yeah,
This volume,
increase in volume
this is called a spike.
going up.
But the price on the second one, it has negative delta. But did we put in a lower low?
No.
No.
Well,
We did not.
If something should trigger in your head when you see stuff like this, warning.
Yeah.
somebody's
yeah.
buying.
Yeah, because if not, we would have been putting a lower low.
You should be putting in a lower low.
Yeah.
If we are able to, let's say from here, I'm giving you what's most likely can happen. There's two scenarios, always two. If from here we auction higher here, do you have to automatically buy this?
No.
No.
Mhm.
Let one candlestick, I'm on 1 hour, finish. Let this
Yeah.
candlestick finish. Once
Yeah.
they bring it back here, this is your buy zone.
Your buy zone, yeah.
What are most going to do here as we arrive here?
Pardon?
They're gonna short.
They're loading up on their
Oh,
shorts.
yeah,
so they
they're
don't
gonna
miss out.
short.
They're going to short.
Yeah.
That's what idiots, I'm sorry, I'm not trying to call it idiots. I should not use idiots, but that's where people are going to short. Because then they're going to say, hey, we failed, but they would
I've
not
done
have
it.
an idea what's actually happening in the market,
I've done it.
right? They're going to be looking to short here while the market's telling them that there's a massive absorption happening right here, guys.
That's right.
There's an absorption happening a little bit right now. Are we going to know who wins? We're going to find out tonight at 6.
Yeah.
And then you're coming in. This is where Drew's setup worked out. Drew, you want to cover this one then? This is your baby.
Oh, there's those two PLCs. I
Okay,
see that. I see
So-
that.
Here's the setup that will be in your PowerPoint. It's high volume nodes, volume accumulation.
Yeah.
And you're coming and look where you rejected.
Yep.
From 92 to 62.
So if we come to that level,
Well, this one already fired.
oh, that's right.
This one fired. This gun is
That's right.
empty.
So the logical thing would be either
Next thing
it's
would
gonna-
be we go do this.
exactly.
Now, these people get
Go here.
scared. These people
Go
go
long.
long. Once they go long, they're going to bring it back. They're going to go short here. Then they're going to go long. These guys lose here. These guys lose here. And dealer wins.
And we that have a high probability that happens, hopefully.
So
By-
does it make sense to
by long at
everybody?
the back.
Like at least how I analyze it, how I look at it. Then I could switch this, right? I could simply switch this to single. I could switch this to volume and see something interesting. There
Yeah,
was
that's
no
the
interest
one
in
I'm working
volume
with.
buying about 43.97. There was a lot of activity that occurred here, and anytime you have a volume node, come on, dude, where are you going?
That's the one that I like a lot. That strategy there, the volume.
And now you come back here and look, they started selling, they sold off more, and now you go to the bottom. Man, I think my wife has heat on. I feel the heat blowing. Wow.
Once you come to the bottom, go long.
And now you're watching to see what happens. Do you have a trade here? If you go prematurely, go along here, can you get lucky here? Yeah, you can get lucky.
You can.
But it can also go this way when you go long.
Yeah.
I don't have a trade at the moment because a 43.50 is a key point on inflection. It's basically a huge market decider right here. So my probability is to go long unless we come out on all cylinders and sell. Does that make sense?
Yes. Anytime there's absorption, Shorty, it's best to wait out and see what happens.
Let them play it out. Let them give you an idea. I mean, what's going on here? Like, look
Okay.
at this one here. Massive
Especially
buying at this level. There was a lot of buyers. Then they got killed by negative 1600 delta here. So maybe they tested the volume here. right? Because price here on these green ones kept going higher. On these red ones kept going higher. Do you guys see that?
Yeah.
Price
Especially
here
at
was
key
up,
points, let them do what they're gonna do, especially when we get to the key points, right?
and then you look at this one, what happened? Big volume, but why did it stop here? Look at this, huge volume, delta, right? And then a lot less volume, less volume. Then you want to look for volume that spike out of the zone. And out of this, between 5 and 11, is that not 100%?
Yeah.
100% increase in volume here. Then you're coming, if you pay attention to this, this is 3 volume nodes together. Now you're, let's say you're coming in this area. I'm just going to expand it to pick up this cluster here. Okay, maybe not. It's still not to do anything. Okay. You're coming here now and watch. You have a green delta on this one, the red delta here, and then you see some buyers. You see the POC again. He's buying, he's averaging here. But it failed. They trapped him. So now if they reclaim this level 43.71, we could most likely target to see 43.91 again.
43.71, which is those 3 nodes right there, right? Those 3 PLCs.
And also
Okay.
from ES, it was our PD value area low on TPOs.
Okay.
And we can turn this on real quick here. And our value area low is at 43.70 and a half on volume. So now, when you look at this, couldn't there be a huge spike once you reclaim this here? And
Sure.
that spike could respond potentially all the way to 43.80. And then the value area high on volume is 44.06 or 44.15 on TPOs. So can I not just, based on this, identify my levels for tomorrow and be done with it in 10 minutes? Probably.
Yeah.
But that's the idea. Tomorrow is all about 43.50 and the reclaim of 43.70. I would probably wait for the 71 and 3/4 to be cleared. And then I would target the top, right? I would look at this, right? Just zoom out a little bit here. Let's put it on maybe 4 hours. Where did the sell-off come from? So let's just do this. Start from top to the bottom. Let's change this to really
Well,
increase.
it's on Friday. Well, it actually started at
Look where the highest delta happened here.
43.99.
44.98.
Where am I at? Oh, okay. You're going, yeah.
Here, look at this. So you have this, and then look at the level here, 44.44. Big level here on the delta, potentially for, a good short here. And then you see a level here at 43.87 was, I think this was our Thursday's value area low, if you guys remember, 43.87.
Yeah, that was a good short from there. I remember.
Yeah, that was a good one. Now you're able to kind of put that into perspective of what's happening, right? Price action, candles, volume, footprints, delta. Okay.
But Shorty, if they're gonna shoot this back up close to where that high is, they need to collect up enough volume, and they need to buy enough to drive it up.
So look at this.
But if you look at the volume profile from the side, it didn't look like we had that much when you look at the entire
Let's look.
spectrum.
Let's look. Here, let's go on volume. There you go. Look where the volume is. I'm on
Well, I know.
30 minutes. I'm just telling you, 230,000 contracts traded here. Another 72 after hours 9. Now I zoom out a little bit to the left and see what's happening here. After hours, they bought a little bit here. So if they're able to reclaim this, they could do a test, right? They could potentially do a test where the volume on, let's say 9:30, they basically absorb it. They spike the volume, then they bring it back, and they would buy a lot more because all these shorts would sell. And
spike up.
They would spike the volume.
Bring it down and then go back up.
Let me go in 4 hours.
Well, I guess but what I was getting at is chopping sideways for a little bit. I'm talking days, not just
Oh, for
30-minute
days they
time
could
period.
chop. Yeah,
They could chop
here.
for
Oh,
like
yeah.
I'm saying we maybe chop 3 days before they drive it back up to
Exactly.
where it was.
Yeah. Market never goes
okay.
from buy to sell.
Yeah.
But what we need to notice is the information given you. Right
Mhm.
now, you have 62,000 contracts traded at 62. If you open above 62 and break 70, you have to assume that those contracts traded were what? Buy or sell?
Buy.
Well,
On the
you
bottom
would
there.
assume they're buy. And if you look here, it was aggressive sellers coming in. Now the question would be, are these late sellers getting absorbed by an iceberg? Especially if the price is higher, that means that these guys that sold late sold at support.
So basically broke even.
Well, I don't know. I don't know their,
I got you.
yeah, I don't know when they got in or not, but all I know is that they thought that we were gonna dump and they started selling, and here comes buyers. If the price is not going lower, that tells me it's being absorbed.
Mm.
So that's what we watch for. Okay. I will most likely do another session to complete the plan, or I'll write up the plan. My family just walked in.
So
into
we
my
watch.
house here.
So we watch for absorption for a potential reversal, correct?
Well, we're watching 4350 is the key level. I'll probably do a recap tonight.
Yeah, but I'm saying overall. I'm not saying just there.
Yeah. You're watching for, you're looking, using delta, you're using volume. You're trying to see if the delta and the volume and the price, well, what's happening. If there's a huge volume and the price is not going lower, that's an iceberg order that's sitting there on the buy side.
Okay.
Does that make sense?
Yeah, if it's not matching, something's wrong. Something ain't right.
And that's what we had on NQ. If you guys remember that bounce, did I say that we are going to bounce here? I mean, I thought I was fairly clear that something was not right with this candle.
Yeah, you said
I
that.
mean, we got to bounce all the way to, I think we even said 1520 was our target. And the reason why, here's a quick reason why didn't we go higher? Here, who got it? I'll reward you $100 if you get it right. Why didn't we go higher here? Why was the level where I said that, 1520 area was a good level to exit? Why is that?
Because you got volume that's like a mile long.
There was no interest above, guys. There's no interest. There's no volume. If there's no volume, they're not interested in trading higher. And look at this value area of this candle here is at 1515. They had no interest of buyers above. It was taken out by sellers. The buyers are not interested going here. If they're not interested buying, what happens? You have to go find where they are.
Over.
Okay. All right, guys. Well, I gotta hop off. My brother and his kids, everybody's over. I think let's aim for 8:30, 8:45, and we'll do a quick recap on the prep. But hopefully, try to formulate the plan for yourself for tonight without me putting it first.
Okay.
Try to put that together and then bring some discussion tonight. Don't let me speak and you just listen. Give me an idea. Give me how to trade Monday.
Okay.
Okay. All right, guys.
Thank you, Shorty.
Thank you.
Thank you, Shorty.
Thanks,
Appreciate
Shorty.
it, man.
I'm sorry. Have a good one.
Have a good day, everyone.
Bye, everybody. See you later.